For the next hour is our guest host, Alpesh Patel. He's been telling me off camera. He's a bit miserable still about the England draw last week, but I'm sure he'll be happier when we win our next two games. Alpesh Patel, principal of Prefinium Partners. Football aside, the data is gently moving in the right direction, isn't it? The economy is slowly drawing its way further away from the recession.
And you called me an optimist when I said that England are going to go all the way to the finals. Yeah, there's one or two sort of little bits there, but come on, let's put it all into context. There's still a lot of very, very negative things out there, not least the size of budget deficits, not least the amount of pain that the governments have to inflict upon the economies, not least when you look at a country like Spain and the unions threatening strikes to make things even worse for their countries.
What didn't we know in this, though, from an investment perspective? This has all been well tailored for a long time. Even the Labour government admitted we had a big deficit. I mean, the fact is they are now going to carry through measures which will mean that over the medium term the economy will be better.
Well, let me give you a little bit of what we didn't really know, though we suspected it. When the Office of Budget Responsibility was set up by the Conservative Party just recently, they've cut down growth forecasts.
Which means those growth forecasts are now in line with the City analysts. From
3.1% to 2.5%, but they've confirmed it. For those who are looking for some kind of silver lining, that growth will, a little bit like the tooth fairy, pay our way out of this difficulty. We now know that's definitely not going to be the case.
Did you believe those estimates of over 3% growth?
Thankfully, it didn't matter what I believed. There were certainly likely to be sufficient number of people out there who were looking at some of the positivity on that. So I'm in a pretty negative mood. We will hopefully get to a situation where when we see rising unemployment, the markets actually read that as a positive thing, because the markets will say, well, this tough medicine seems to be working. When that happens, I think that's when you start getting a sense that we've hit some kind of a bottom.
Do you think the markets are prematurely rising then? I mean, I couldn't believe it. We've had 5 days, we're on day 6 of consecutive rallies for the FTSE 100, up 3.8% over that period as well. Is it premature to try and rally now?
I think so. The first things that I tend to look at is I look at the technicals, actually, and I look at the Dow rather than the FTSE. Let's start off with the bigger market. And when I look at the weekly and monthly charts on that, the momentum is most definitely still downwards. The FTSE looks a little bit better, but it tends to get swamped by what's happening in the US anyway, in terms of the Dow. And whilst the Dow is trading at a multiple, I've got a figure on a PE of about 14, which isn't too pricey,
sure,
and earnings figures have been good, the downward momentum is still in place, which means I would rather put my money on, every time we get a bit of a rally, people taking money off the table and selling into that, rather than saying, well, this is a great turning point, we're about to get some kind of V-shaped recovery.
But looking at other technicals, the Dow, using your example, closed above the 200-day moving average. That's a very positive technical signal for a lot of people who follow those kind of things.
Yeah, absolutely. It's not one of the indicators I tend to use. It tends to be quite lagging, tends to be very long drawn out and long term. I tend to use the MACD without getting too technical about the technicals. It tends to be relatively accurate on the weekly chart in terms of when we get a bit of a rally on the daily, it does tend to get sort of washed down, beaten down by what's happening on the weeklies. And on the weekly charts, the momentum is most definitely downwards. And for those who like to look at these things and get excited about them, it is a bearish divergence on the weekly Dow.
Washed down, beaten down, bearish divergences. There's no turning you just yet, is there?
I'm just trying to make the markets even more exciting than they already are.
They are indeed. Alpesh, we'll get some emails into you, I'm sure. strictlymoney@cnbc.com.
Let's talk about the PBOC then. Do you worry that, I mean, we've seen this decent run in equities. Are we in this sort of sweet spot where we're talking about, we're still talking about recovery, and that seems to be going on pretty nicely in terms of the equity markets, but we haven't quite got our head round any rate hikes to come, and therefore we're still swimming in this sea of money that's been pumped in by the central banks, certainly in the developed world. Could tightening in China put an end to that?
No, it won't, for a couple of reasons. First of all, equity prices are going to rise because price-earnings multiples are relatively low, even as a multiple of 10-year Treasury yields, where they tend to, the PE tends to be about 3 times 10-year Treasury yields. That gives you some idea of the difference in risk profiles, how much risk people are willing to take in equities. And so even if you look at that multiple, there's upside move. That's why I say 15 to 20% on the equity side. Yes, okay, China's going to raise interest rates, but that's to try and control the bigger problem they have with inflation than certainly we have, and that's a good sign. The market reads that as positive. They're on top of things, as opposed to just letting things get run away. That's why it's a buying opportunity to get into some of the commodity-related stocks. They'll be down for maybe a week, maybe 2 weeks, but beyond that they'll be up. I'm long copper for this year as well. It's easier to foresee the markets over the next 12 months than it had been over the last 12 months.
Alpesh, thank you very much for that. And Ashraf?
We fitted up the Queen and the Duke of Edinburgh with their own monogram personalised 3D glasses, and they went away with them. So we haven't had those back.
Kidding.
That's cheeky.
Times are tough, you know.
No, but they were fabulous. If I were them, I'd have gone off with them. But so I can guarantee you that the royal family have some pretty cool 3D.
When I see them, I'll ask them for them.
Alpesh, are you much of a cinema going? I mean, we see a lot of extensions of existing franchises which seem to do very well. That always disappoints me slightly. I want to see some new creativity.
I don't know. I think we're seeing some new stuff. I mean, I've been going to the movies in pretty any country I go visit. You know, it's, as you rightly say, it's a great night out, and it's relatively inexpensive. And the cinemas have been full. It's very annoying. You know, I think to myself, where's the recession? I've got to queue up for tickets and all the rest of it. I wish they weren't so full, and I could sort of jump the queue. But they're full.
We've had a good start to the year in terms of the King's Speech. That seems to be
King's Speech started last weekend. Kelvin Mackenzie did a lovely article yesterday about disgusted of Tunbridge Wells turned into delighted of Tunbridge Wells, because our Saturday night performance in Tunbridge was totally packed out, and at the end everybody stood up and clapped.
Well, I was in the Odeon in Muswell Hill on Saturday, and that was also a sellout, and people were double booked. It was chaos.
Yeah.
Rupert, thank you very much. Thank you very much for coming, Rupert Gavin, CEO